Welcome to this week's wrap. The headline news this week is the release of the latest StewartBrown Aged Care Financial Performance Survey, which shows the sector's viability is continuing to decline. The survey found that 52% of aged care homes are now running at a loss. 28% of homes recorded an operating cash loss during the September 2020 quarter. And sadly, these numbers are not new. Where it gets interesting, however, is in the home care results. The findings indicate that the revenue per client per day average for participants declined by 4.5%. This included the first 25% of home care providers, which would typically have the best results. Their revenue fell 6.9%. So, why is this the case? StewartBrown speculates that given the current circumstances with COVID and the increased levels of competition, providers may have been reluctant to increase their prices on the 1st of July, even though their costs would have gone up. While home care providers appear to be performing better financially, the accounting firm puts this down to reduced costs, particularly for staff. This is reflected in the staffing hours, which dropped to an average of 5.39 hours per week in September 2020. For the first 25% of operators, staff hours per client per week dropped 2 hours to 5.06 hours. This is a huge drop, but it signals an ongoing trend. StewartBrown says that care hours have fallen between FY17 and FY19. They attribute this partly due to the lower available package revenue from the $1.25 billion in unspent funds now in the system, but also say it is likely due to providers driving lower costs to improve profitability. Is this a sustainable way to run a business and to provide the services that older Australians are entitled to receive? The answer is no, and it's a question that the government will need to respond to. With the Royal Commission's final report now just a month away and likely to push for more people to receive aged care services at home, the sector's future sustainability depends on a resolution.